Unemployment is at its highest since 2005. Houses are in foreclosure in a slump triggered by subprime mortgages. Stocks are down. The dreaded R word, recession, is now on the lips of economists. In the midst of all this, the U.S. government provided $30 billion in loan guarantees to prevent this investment banking firm from collapsing. Bear Stearns was on the verge of bankruptcy when the Fed's multi-billion-dollar package facilitated its sale to J.P. Morgan Chase. The Fed's move brought money men to Capitol Hill, where they were drilled by Democratic and Republican senators.
Everyone agrees that Bear Stearns was staring into the abyss. What about homeowners who are also staring into the abyss?
The Fed's actions may create expectations that any major financial institution experiencing difficulties might be eligible for a federal bailout.
Bear Stearns was the fifth largest investment bank in the country. Federal Reserve Chairman Ben Bernanke said the guarantee prevented a global financial crisis.
The sudden failure of Bear Stearns likely would have led to a chaotic unwinding of positions in those markets and could have severely shaken confidence.
That did not go over well with Republican Senator Jim Bunning.
How big do you have to be too big to fail?
Alan Schwartz, the CEO of Bear Stearns, blames rumors for the collapse of his company.
Before unfounded rumors began circulating in an already precarious credit market, leading to the run on Bear Stearns, the company had adequate capital and liquidity and a book value of approximately $12 billion. Facing the dire choice of bankruptcy or a forced sale under exigent circumstances, we salvaged what we could to avoid wiping out our shareholders, bondholders, and 14,000 employees.
With no early warning of Bear Stearns' demise, some senators expressed concern. Again, Senator Bunning.
But how do you let the entire financial system become so fragile that it could not tolerate one failure?
Silence. Then Bernanke.
This has been a long time in the making. There was a substantial credit boom that peaked last summer. That credit boom, which was driven by international factors, which I could go into if you like, involved a substantial increase in risk-taking, a lot of financial innovation, some of which turned out not to work so well, deterioration in underwriting standards, and essentially a letting down of the guard.
Democratic Senator Charles Schumer called for an overhaul.
If we don't change the regulatory structure, given the inter-party risk you've talked about, the quick moving of huge amounts of money, we're going to be subject to these problems sooner or later.
Changing the regulatory structure could be a time-consuming, complex undertaking. But Schumer said without it, American taxpayers may again find their money propping up other financial firms. Carolyn Presutti, VOA News.